What's going on, guys? Yes, it's me on a hammock here on the dock. There's my boat over there. And why am I doing this video from here? Well, because I just remembered I had to do a video, and I've been on this hammock for like the past hour. Didn't want to get up to go get a microphone or anything. I said, you know what? I'm going to do it from right here, from the dock, enjoying this awesome weather on the hammock. Now, what is this video about? What are we going to go over? Very simple. This week on the 10th, we have CPI data coming out. Shortly after that, we got PPI data that'll come out. And on Friday, what happened in the markets? Why did it go down? Why did Tesla drop as hard as it did, right? Why did job numbers not push this market higher since they came in above expectations, showing a robust, strong job market? Well, simple facts and simple things that when we really start to think about it in the macro, we start to realize why these things happen. Whoa. This is unedited, guys. Well, simple. If on Friday we had this huge jobs number come in that came into the tune of over 500,000 when expectations was just over 200, why would that bring the market down? Why did the market and pre-market at 830 drop as hard as it did? Simple, guys. What are we chasing here? What are we trying to do? We're trying to bring inflation down, right? And we try to bring inflation down by the Fed, increasing rates, right? And what was everybody thinking? The Fed's increased rates so much lately that the reality is we probably would see maybe a little bit of a drop in the next rate hike in September. Why? Because here in August, we don't have any Fed meeting. So the thinking was that instead of doing 75 basis points in September, we'll probably just do 50. But now when we see the job numbers as high as they were, why is it that we probably won't see that 50? Why is it that we probably see 75 again? Well, because if the job market is as strong as it's looking, then that means the economy is still strong. People still have money in their pockets, thus causing pressure on products, in stores, on supply chains, on everything. And if all that pressure is still there, then guess what? Inflation probably hasn't or won't drop as much as we thought it would have. Now, everybody thinks that the June number for CPI, which was I think 9 point something, if I remember correctly, it's been the highest we've seen all year. It's been the highest we've seen in decades. They think that that is the highest we will see, period. And if that's true, that would mean that July should bring lower CPI data. And we'll find out now on the 10th of August what July's numbers were. If those numbers aren't lower than June's, get ready. Because that little pullback we saw on Friday ain't going to be nothing, right? I think we'll just rip face all the way down to 400 and then probably a few days later be down in 392, if not the 380s again. If, and it's a big if, CPI comes in flaming hot again, like we saw. If it comes in over 9, if it comes in the 9s, I think we go lower, and we go lower in a hurry, right? Now, if we come in and we're much, much lighter than expected, then I think that's a huge win. I think then September rolls around and you might see maybe another 75 basis points followed by the next round after that being in the 50s on the rate hikes. But then at that point, I think we start to really slow it down. Inflation really starts to calm down. But the reality is that if these job numbers continue to go up and up and up above expectation like they are, I don't think inflation is slowing down. The reality is the only way that we get a lower number in inflation is because commodity prices in July were low enough to hold inflation down. That's to hold the CPI data down. That's the only way. The commodity prices must be low, so low that it would influence July's number in a significant way. Why do I say that? Well, simply put, because those job numbers were almost double, if not more. I don't remember the exact figures on Friday, than expected. And that is not a good thing. That's not what you want to see when you're trying to slow down a runaway economy that's just flaming hot with tons of jobs, tons of growth week after week, right? If you start to see that continue, then this inflation isn't under control at all. And everything is just false hope, right? Now, do I think we're going to enter into some catastrophic recession like back in 2008, 2010? No, I don't think so. I don't really see any reason why. I was talking to a friend of mine recently, and I don't think that's what we see. But I do think that we are in a recession already, and I do think that unless the commodity prices that went down in July were strong enough of an influence on the CPI data. I think CPI comes in flaming hot again for the month of July, or right on par with June. Which if it comes in right on par with June, we'll start to maybe see people be like, oh, okay, we're kind of topping off. The reality is we haven't seen a top off yet. People think that June's number is like a top because it's the highest ever, but with job numbers that we saw on Friday, I don't know what to tell you. Now, what levels am I looking at? Well, on the SPY, I'll be looking at a drop into the low 400s, 400, 402 or so. If we break underneath that, then I think we get down into those 390s, low 390s fairly easily, especially if CPI data comes in flaming hot on the 10th. If we get crazy CPI, like if we come in and we're like above June, game over. I think we go all the way down to the 390s and then inevitably back into the 380s. And then at that point, I think we make a new low on the year. Remember, I have not conceded the low on the year yet. I'm almost ready. I've said in my previous videos, I was almost ready to concede, but I haven't conceded yet. And based off of Friday's job numbers, I'm kind of happy I haven't conceded yet. Still bearish on the year. I don't think we see a new all-time high on the SPY probably for at least 24 months. So we'll see what happens here. I'm watching 400, watching 392, then watching the low 380s on the SPY. On Tesla, watching about 840 for maybe a bounce play. If the market implodes, then we should get all the way back down towards 800 and maybe even lower on Tesla. So I'll be watching that this week. But that's it, guys. That's what I'm looking at this week. And, you know, sorry I didn't get up and put on a mic and do all the nice stuff. I'm here chilling, and I hope you are too. Guys, let me know where you think this market heads over to on the comment section below. Just drop your comments there. Let me know where you think we're going to go next. Let me also know what you think your the CPI data is going to be. I don't know. I think we're going to get either high 8s or well over 9 again. That's just my thought. And then I think we go visit 400 and then the low 390s if that were to happen. If that doesn't happen and we get a very low CPI and like, oh, everybody's like, oh, this is awesome, then I think we like that right back to 416 on the SPY and test that area. I think technically that area still holds resistance, 416 into the 420s max. So those are my thoughts. All right, guys. Hey, thank you very much for watching. I hope you guys have a great week. I'll see you on the Trading for a DTC.